Hi, this is Bill Wood from DisciplinedTradingDecisions.com. Welcome to the weekend update. Today we'll be covering how the bond yield curve relates to the S&P 500. Are there clues that a recession is ahead, or is the bond yield curve just a broken barometer? All this and my take on the market, but first,
trading futures, options on futures, and retail off-exchange foreign currency transactions involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results.
okay, this is what we're looking at, the 3-year compared to the 10-year yield. And here is the zero line. Every time it comes under there, that means that 3-year is yielding higher than the 10-year. It's an inverse correlation. If you notice down here in, I guess that's May of 1989, and then what followed was a recession. In 2000, the yield curve inverted in July and followed by a recession in April of 2001. Again, came down below the yield curve. It inverted in July of 2006, and by November 2007, we were in a recession. And if you look right now, we are inverted. The 10-year yield and the 3-year yield are inverted. So let's take a look at what happened in these intervals compared to the S&P 500. So this was the first one, happened in June of 1989, happened I think in May of 1989. 15 months later, we went into recession. And from that recession, we had a 20% drawdown, 20% pullback, let's say. The next yield curve inversion was right here in July of 2000. And 8 months later, we fell into recession. And this from the top here to the bottom is approximately a 50% pullback. The next one was in July of 2006. We went a little bit higher, and then here's where the recession started. Took 18 months from the yield curve starting till we actually went into recession. And again, this was a little over from top to bottom. This was a little bit over 50%. Maybe like 58%, something like that. So as you saw from that chart, we are currently inverted. The 10 and the 3-year yield curves are inverted. So is this the top of the market? I've been asking this question for several weeks. Is this the top? Now, if this was the top, how far could it pull back? Well, this is a 50% retracement down here, down to approximately 1,500. We went up to 3,000, so 1,500 or a little bit higher would be a 50% pullback. Since the yield curve inverted in May of 2019, this box represents when the recession could actually start. I think this is 8 or 10 months out. And during this pullback, this could be one area of support. This is 50%. If you recall, just this pullback right here was a 20% pullback. We saw in some instances that the market did continue to go higher until the recession started. Like back here, the market actually went higher before we actually went into recession. That was a pretty scary time. Next, I'm going to look at the Elliott Wave count and market profile. But first, I'd like to share with you that I've written a book. It's actually a workbook, one that you print out and write in. Along with it comes 90 minutes of coaching videos. I've written it for those who have experienced trading but are still having difficulty becoming profitable. Perhaps you're making the same trading mistakes repeatedly, overtrading, moving stops, failing to pull the trigger, and exiting too early. In the workbook and videos, I give you insights into why these things happen, not only to you, but to all traders. You see, it's not your fault. We are wired as human beings to be terrible traders. We have a natural defense mechanism against risk, causing the fear of missing out, the fear of loss, the fear of leaving money on the table, and the fear of being wrong. We call it the 4 fears of trading. The workbook and 90 minutes of coaching videos will help you to crush the 4 fears of trading and help you to become the trader you've always wanted to be. Well, enough of my plug. The workbook and videos does have a small cost, and if you want to find out more, follow the first link in the description below. Thanks for your patience. Now back to the markets. Okay, we're looking at the SPX here, and I have a bullish Elliott Wave count and a bearish Elliott Wave count. So here's the bullish one, saying that we have wave 1, wave 2, and an extended third wave, right? Wave 1, wave 2, extended third wave, fourth wave, and now we're into our fifth wave. Wave 5 is made up of 5 waves. So this could be the top, this top of the market here could be wave 1, wave 2, and we're working on wave 3. The alternate, more bearish count would be that this is wave 1, wave 2, we have an extended third wave, wave 4, and then wave 5 is made up of 5 waves. 1, 2, 3, 4, 5. And the bull market in the near term is over. Let's take a closer look. Okay, sticking with the bearish count, this would be wave 4. This would be wave 5, and wave 5 would be made up of 1, 2, 3, 4, 5 waves. And we would say that the bull market is over for the time being, and to expect a correction. So if that was true, then this is something we could be looking at here, beginning a down wave, maybe 5 waves for an ABC pattern, something like that. Okay, again, the bullish count would look like this. This would be the major wave 4, and this would be a huge wave 1, wave 2, and we're continuing up 3, 4, and 5. So wave 3 would be made up of 5 waves. So you could say that 5 waves here to make up wave 1. We're in wave 2. This wave 2 could either have already ended, we're wave 2 and we're moving higher, or this could be an ABC and wave 2 could be a little bit further down. What we cannot do is fall below this wave 2. Okay, this is an hour chart of the ES, and as I mentioned before in another video, I can easily count a wave 1, 2 up here, and then as it comes down, I don't really see a wave 3 and 4 unless this is an extended fifth wave. So is this wave 3 and this is 4, and we are coming down for a fifth wave down into here? Not sure. Or this could be an ABC and come down into here, or as the bullish count said, this is the end of this correction and we're heading up. This would be another 1, 2, and we're heading up from here. So just some areas I'm going to be watching are this area here where this broke down from, this area up here. I'm going to be watching this Andrews median line drawn from back here. I altered this median line so that it would touch here and touch here. So I'm just going to watch that. On half-hour chart, I'm also watching this channel here to see how it interacts with this line up here. This line had some frequency. If you follow it back, found some buyers back there. It did pierce it, but the majority stayed above it. And this was the high back here and found support back here. Okay, next I'm going to look at market profile. Okay, in this wider view here, what I'm seeing a lot of is short covering. So the market comes down, it takes another run at it, pushes down, cannot get below this day here, closes toward its end of its day. The next day opens up, gaps, comes up, have this P type formation. Next day we're filling in these anomalies here, try to push down again. This is toward the end of the day here, just getting within here, could not get within the value area of these days. The next day here, so the market opens here, can't get any lower, and as it starts to head up, the shorts have to get out. So I believe this was short covering again. Market tries to head lower again, can't break this low over here, and so I believe this was another day of short covering. So the shorts have tried once, twice. This is the third time. Will they give up and will it head higher? We'll see on Monday. If there was any clue that next week will give us higher prices, is that we tested from here to here at the end of the day, and we closed up here toward the top of value. Value definitely went higher, so we will see. We'll see what happens on Monday. Well, that's all I have for today. This is Bill Wood letting you know that you can check out more videos at disciplinedtradingdecisions.com or sign up on the second link below for weekend updates. Please subscribe to my channel and remember to click the bell icon to get notified of more videos coming out. And I really appreciate your shares, your likes, and feel free to comment below. And remember, stay motivated, stay focused, and stay disciplined, my friend.